to the next part of the day. All right, so we talked a little bit about that supplemental withholding, and that there are two ways that you can calculate like bonuses and things of that nature, something that's out of the ordinary of the regular salary. They can be added to the regular pay, and then the taxes can be calculated. So get $2,000 in wages, $1,000 bonus, you're gonna just calculate the federal income taxes just like the way that we just did based on $3,000, right? That 2,000 plus the 1,000. Or you can do it separately. If you choose to calculate like a bonus separately, then it has a flat rate. 22% is the amount on most bonuses. If you're lucky enough to get a bonus of $1 million or over $1 million, then the rate becomes 37%. So if you get $1 million bonus, you're going to pay $370,000 in federal income taxes on that amount. Now, good news is most of that wouldn't be subject to Social Security taxes, right? But also it's going to put you well over the threshold for the additional Medicare tax, so you're probably going to have an additional hit on that. So those two different ways of doing it, neither one of them is terribly complicated, especially if it's just a flat percentage. So let's do a comparison. Let's just say that we do have wages. I guess we need to put our 4 components back up here. So wages, frequency, and I know I'm putting these in a different order because my brain sometimes thinks in a different order. Checkbox and filing status. All right, so let's say we've got normal wages are $2,000. It's a weekly pay, no checkbox. It says mo, not no. And filing status is single. And then they get a bonus of $1,000. If that bonus is just added to the regular wages, then what happens is that this becomes $3,000. And we use the method that we just used to determine what that withholding should be. So let's see if it's $3,000. Let's see if we can use the table. Oops. Oh, I've got both of them on there. That's probably too high for weekly. All right, well, that's fine. We'll use, so we're talking about a weekly pay, single. I'm just going to show you the difference between the two amounts, how the tax will fare in both of these situations. So weekly payroll period, no checkbox, we're going to use a standard, single, so this is the table that we're going to use. Taxable wages are $3,000, so that's between $2,100 and $3,768. Tentative amount to withhold is $313.24 plus 24% of the amount over $2,100. So 3,000 minus 2,100, 900 times, I say 24%. $216. So $529.24 would be our total withholding on that $3,000. Now, what if we did it this way? I'm going to put that over here so we don't forget it. So $529. This is when we're combining the bonus with the regular wages. Let's do it separately. use the table here too. Well, I don't think we can use the other for wages anyway. $2,000 is between $1,126 and $2,100. So $98.96 is our tentative amount to withhold plus 22% of the amount over $1,126. So 2,000 minus 1126. $874 times 22%. $192.28. So $291.24. Now that's only on the $2,000. Now we've got to do the tax on the $1,000. 22%. Yeah. So $220 times 22%. $220. So in total, the taxes $511.24. So when we combine the two, we're paying $529.24 in taxes. When they're separated, it's $511.24. That difference is probably going to be much greater when you get a greater bonus. Like if you're getting a bonus, think about this. If you're making $5,000, we'll say we're still single, $5,000. And we're getting a $5,000 bonus. Well, that means $10,000. Our marginal tax bracket is here at the 35%. But if we tax that bonus separately, it's going to get taxed at 22%. So you're probably going to pay less in taxes if it's packed. The larger that bonus is, up to the $1 million, you're going to probably pay less in taxes than if you just combine the two. Okay? Because by combining it, it's increasing your marginal rate here. And you'll notice the 37%, I said if it was a bonus of $1 million or more, 37% happens to be the highest tax bracket as well. It doesn't happen to be, it is by design the same amount. All right, so let's talk a little bit. Does that make sense? Okay, on those two different ways of calculating it. So let's talk a little bit about bonuses. If that bonus is just added to the paycheck, then you're not going to be able to gross it up. If it's not added to the regular paycheck, then you've got this opportunity to gross up the bonus. And what that means is, like I said, we've been working with taxable income and starting from taxable income, working our way down to the amount that's actually going to get deposited into somebody's bank account, right? To their net pay. By grossing up, what we're doing is we can start with the net pay. We can say, okay, Anthony, you've done a great job. We want to give you a $1,000 bonus, and we want you to actually have $1,000. We don't want to start with $1,000. We want you to end with $1,000. So here's how we do that. We take the net paycheck that's desired, divide it by 1.0, which is 100%, minus the sum of all of the combined tax percentages. This is why you can really only do this with a flat tax percentage. This equals our gross paycheck. So let me show you how that works. Let's say we've got this $1,000 bonus. And that's how much we want you to get in your bank account. So we're going to take the 1,000. We're going to divide it by 1. Again, that's 100%. Minus, I should put the minus on the outside of this. The sum of all of our combined tax percentages. Well, flat, our bonus percentage is 22%, right? So 0.22 Our Social Security tax is 0.062. Our Medicare tax, 0.0145. Let's just pretend for a minute that we don't have any state income tax.
Okay, we live in Texas.
What's that?
I said, okay, we live in Texas.
Yeah, no state income tax. So we're gonna combine all of those amounts. And where you have to be careful here is just is making sure that your decimals are correct. So 0.22 plus 0.062 plus 0.0145. Whoops, I did something wrong. 0.22 plus 0.062 plus 0.145. I guess I didn't. So
Yep, you missed a 0 with the 145.
Oh, thank you. 0.22 plus 0.062 plus 0.0145. There we go. 29.65%. Okay. 0.2965. So 1 minus that. 70.35. I'm sorry, 0.7035. See, I'm getting my good example of what not to do. 0.7035. So we'll take the $1,000 divided by 0.7035. 1421.46. This is what our gross paycheck needs to be in order for Anthony to get $1,000 deposited into his bank account. Okay? Now, we can work backwards to double check this, right? Well, I guess we just worked backwards, now we can work forwards to double check it. So, 1421.46, let's check it. So, Social Security, Medicare, and federal income tax. So again, 6.2%, 1.45%, 22%. So 1421.46 times 0.062, 8813. Medicare tax, 1421.46 times 0.0145, 2061. And then 22%. $312.72. Let's do the math. I hope it doesn't come out right because I want to show you something. I hope it doesn't come out exact. It might though. It does. I'll have to make up another one where it doesn't come out exact. There you go, $1,000. It works. We're good. On your problems where you have to gross up, do this last step of double checking, okay? Do this to make sure that you are correct. Don't just stop here. Also do all of this. So let's go a little bit, let's say, maybe we do have some state income tax and it's a flat amount. We'll make it easy. In Iowa, that's what it's going to be after 2026, something like that. All right, so let's say, let's change our bonus to $2,500. Since we now have a state income tax, this is going to change. So we got to add up all of our taxes, right? So Social Security, Medicare, federal income tax, so Social Security, Medicare, federal income tax, state income tax. Let's say we have a 3.5% tax rate for state income tax. Add all of those up. Oops. $33.15. So now, 2,500 divided by 1 minus 0.3315, 0.6685. $37.39.72. There's our gross. All right, so let's work backwards. So in order for Anthony to get $2,500, if he's in a state that has a 35% tax rate, we're gonna have to gross it up to $3,739.72. So let's double check this. So we've got Social Security, 6.2%, Medicare, 1.45%, federal income tax, 22%, state income tax, 3.5%. 3739.72. 0.062. 231.86. Medicare, 739.72. 54.23. $822.74. And 3739.72 times 135. 130.89. All right. 3739.72 minus 231.86. 54.23. God, dang it, it worked out exactly. Okay, the reason I don't want it to work out exactly, let's say we have a rounding difference. Let's just say, for the sake of argument, that this was actually 130.90. Okay? That means that this would turn out to be 24.99.99. In this case, what you do is make this 73. I'm sorry, 74. No, 73, yeah. 1 penny more. These numbers stay the same. But make that 1 penny more so that this becomes 2,500. Okay? Because it's not always going to be exactly right, because you could see the numbers are in those percentages we're talking about. Same thing as what happens with the employer-employee portion of the Medicare. When we work in percentages, things get a little weird. So sometimes that's not always going to end up being exact. If it were 2,501, then you would subtract 1 penny from the gross amount. Okay, so that's where you make that adjustment, is in the gross. Questions about that? Thing to remember is just this, so whatever you want, whatever amount you want the bonus to be, is your numerator. Your denominator is 100% minus the sum of all the tax percentages. Okay, and then you're just going to divide it to get your result. Questions about that? All right. we will, I'm not gonna try to squeeze in anything on this in 5 minutes.